To Globe, this is Jeff Killian for the VTC. We welcome our subscribers and all invited guests today to our continuation of our pre-market open analysis special alert 1/6/2022 market short. This video today, the short video, is a continuation of the call for the market going short. Again, that video was recorded and posted to our YouTube channel on 1/6/2022 before market opening. So if we reference that video for just a moment here, we can clearly see at this point that the levels that we had laid out on that video at that time, if we can get to full screen here for just a second and play, the levels that were laid out at this time on the upper right hand corner here were where we started. The additional two levels to the downside that you'll see in the new video where we had price profit targets laid out to the downside, okay, are included at the end of this video. So when we finish what we're up to here today, we'll include a link to this part one for the original special alert market going short call so that you can see that one as well. So let's get out of that right now and get back to the task at hand here and giving you a continuation of where we are. So we can get a timestamp in here. We are now at 9:22 a.m. Eastern Standard Time, New York. So we have the official stamp, no doubts whatsoever as to the time this was recorded before it's posted to our YouTube channel, stamped out. Okay, let's begin. So right now, as we had predicted on the last video, again, the prices could have traded down as far as this level right here. Now this is drawn again from the open of 12/21/2021. That open price was 456775. Using the S&P Emini Futures end of day chart updated in real time as a proxy for the analysis, near contract month, upper left hand corner, 322. Okay, these levels are valid price profit targets to the downside that the market did reach after the previous video was recorded, again, as we had predicted. The strong volume that came in here for the big down day, the most recent big down day, 2231K contracts total traded, okay, on 110 was significant. Now, there was some buying pressure that came in to hold those prices off the open level here. Again, we laid out ahead of time. So we had basically just a few ticks on the low of that bar reaching the open. So that was an excellent call on our part. Remember, the volume dry up and the additional volume that came in after the multiple negative divergences and multiple time frames that we're going to walk through again quickly here showed that there was so much pent-up selling pressure within the market that had not yet taken place in the directional short to the downside that things had to change. They had to change. So this goes back to the basics. Who's in control? The smart money, obviously. When and where do we have any real business, in trading larger contract sizing trades to the downside short in this case, in order to make the lion's share of the money when and only when you have identified with a major market turning point, which is exactly where we started and where we're still headed down right now. Let's do it. The money flow index, after the volume, here we are. The negative divergence that was created here, the strong negative divergence, traded off of that peak and down, and here we are again. Right now, the val is 45.89. That's significant. That says the market should open and trade down after the shakeouts are complete. Okay, more downside movement, high probability prediction out of the short-term smart money tracker, MFI. The CMF right after that, coming in strong. Here we are. Again, another down tick for the session at a negative 6.05, signaling more downside high probability trading for the session, probably and most likely the rest of the week, the way it looks exactly right here and right now. Chaikin oscillator coming in right after that. Third most important money tracker. Minor upticks. Third in place here. Third in importance. And an accumulation distribution tracker within the MACD indicator itself. Three different mathematical computations, MFI in first place, CMF in second, CO in third. So the weight, the combined weight is still to the downside. Let's take a look at the SMI and look to determine what are the real probabilities of continued downside movement. We have no look back. We're through interior support at this point, okay? And we're moving down. The disparity between the stochastics line and the momentum line here after the cross, after another negative divergence, there's no look back. There is no uptick whatsoever off of this indicator's findings at a 62.21 and 53.35 right now. The MACD, our slowest in the stable, the disparity continues to widen after another negative divergence. So at this point, with everything that we're looking at right now, it appears that the market will trade down again to this level right here for the open, again, possibly on a closing base, 12/21, 2021. After that, the approximated levels to the downside will be here at this juncture, and then below that, as far as down to possibly here. Why? Because we have a volume dry up, and we have a price chart pattern uniformity here that didn't exist until previously here, and some at this point here. So there's really no downside resistance, people, is where we're going with all this. Until we get to possibly this point here, some volume starts to come in here, but it is still light. After that, the next levels to the downside will be here, and then respectively. Now these are approximated because we're on a time constraint right here. So these are the major support levels to the downside, once again, that can, on balance, should be used as longer term price profit targets on a daily basis. Now, between now and the end of the day, it is now 9:27, 9:28 Eastern Standard Time. We're going to have a multitude of real-time trade setups, but these are the levels that should be extrapolated over onto the 1-minute chart, along with all the other analysis that we run through here on a daily basis in order to be able to select only true high probability trades. This is Jeff Killian for the VTC. We got to get ready. The market's going to open up in just another few minutes. For more information on how to get this right, take a look at our YouTube channel, take a look at our website, and see all the non-edited recorded trades in real time. Take a look at our newly designed website, with the Emini course. It's a great option for everyone who wants to up the game. So once again, we'll see you next Tuesday on the next video. Be careful out there, and remember, the key to risk mitigation is selecting only the true high probability trades. And that means you get in the business and you stay in the business. That's it. Thank you for joining us again, 9:29 a.m. We'll see you next Tuesday.